what you're about to see and learn is going to excite you. It's going to save you money. It's going to prevent a whole lot of stress. And most importantly, it's going to give you the opportunity to build wealth. I'm talking about buying a house for only $900 out of pocket. In this episode, I'm going to share everything you need to do, the entire process, to purchase a home just like this one for only $900 out of pocket. Now, my name's Wayne Turner. I've bought, flipped, built. I've helped thousands of people over the years with their real estate transactions, and I share that with you so you can have the confidence knowing that what you learned from me is from actual tried and true decades of experience. So let's jump in. To begin, it's important to know that this is a USDA loan, United States Department of Agriculture, and it falls under the same guidelines as FHA. However, you don't need the 3.5% down payment. You only need $900 out of pocket, and that's to cover your home inspection as well as your appraisal. The seller can pay all of your closing costs, which typically runs around 3.5%. Now, you have to have a 620 credit score, and you also need 2 years on the job. But here's what's important to know. You just need to have 2 years on the job. It doesn't have to be with the same employer. If you're a welder, if you're a pressman, if you're a mechanic, and you just started working for a different company, you're a teacher, that's quite all right. You will qualify for these types of loans. Now, to begin the qualification process, you must know there is a difference. There's qualified and there's getting approved. Qualification is talking with a lender, telling them, I think this is my credit score, I've been on the job for a few years, and this is my income, here's my debts. To actually get approved, you fill out an application, and with that application, you give them permission to pull your credit score. Most importantly, they're looking at your income, they're looking at your debts, they're looking at your score. And what's really exciting about the new simulation process that they have out now and the technology, they can look at your credit, and if your credit score is less than 620, they can show you exactly what to do in about 30 seconds to get that score over 620. Now, one thing that's really important to know is you have to let the lender know that you're interested in doing a USDA loan. Say, hey, I've watched this video, check this guy out. His name's Wayne Turner. He says I can do these types of loans. There's lenders all around the country that do these, and they will gladly do these types of loans because they are guaranteed by the United States Department of Agriculture, the United States government. So if a seller pays your closing cost, you're able to purchase a house like this for only $900 out of pocket. However, there are some stipulations. Now, there are two stipulations, and the first stipulation is basically you can't make too much money. People ask me, Wayne, what is the ceiling amount? What is the limit on the home that I can purchase? It has nothing to do with the price of the home. It has to do with your income. You see, you can't make too much money. You're limited at $110,400 in most county, parishes, and states. However, it does vary. That, for example, is if you have a household of 4. So if you have 2 spouses and 2 children, you got a household of 4, you're limited around $110,000. Now, if you have 5 or more, that number bumps up to around $134,000. The second stipulation is these homes can't be right in the heart of the city. Homes that you purchase through the USDA, United States Department of Agriculture, have to be on the outskirts. They have to be in the suburbs. These are homes, and it's not limited to specific homes. They look at your income, they look at your debt, they look at your credit, they look at your job, but the house itself does have to reside in certain areas. These areas run 30 to 40 miles outside of major city limits. The good news is those home prices are lower in those areas for these USDA loans. Now, you know what that means. That means you get a good price, a good buy on a house. I'm walking around this house right now. It's on 1.5 acres of land. It's about 35, 40 minutes from New Orleans, Louisiana. This home is priced at $148,000. This is the type of homes that you can purchase. Now, keep in mind, they're going to do an escrow account, and you do have to pay private mortgage insurance anytime you do not put 20% down. But it's important to know that you don't have to put 20% down to purchase a property. However, you will have to pay that private mortgage insurance. Now, it's not crazy expensive. It's actually less on these types of USDA loans. But you also have to know that you're going to have taxes and you're going to have insurance. Now, taxes and insurance also are a little bit less. For example, the taxes on this property run about $2,000 a year. The homeowner's insurance is going to run you about $2,500 a year. All of that's going to be rolled into your payment. At an interest rate, for example, of 7%, your mortgage payment is $1,400. That payment stays the same. The principal and interest payment stays the same. Your PMI doesn't go up. However, as the years progress, if your taxes go up and your insurance goes up, your payment can go up gradually. So once you go through the qualification and the approval process, the next thing is to get with a good real estate agent. You can certainly search out homes for yourself. You may want to just contact an agent. Either way, if you find a property that you'd like, your lender is going to tell you what your maximum amount for the mortgage payment is going to be. And they're also going to tell you what price range of home you're approved for. Once you're approved and you're good to go, you want to make sure you've got a copy of that approval letter so you can share that with any real estate agent for the home that you're looking at. So whether it's your agent, that you have somebody working for you, or you go directly to the agent that has the property listed, you want to make sure you have that piece of paper, because that piece of paper is shown to the seller, and that's like cash money to the seller, because when you close on the home and take ownership of it, the bank is loaning you money on that property, that asset, and they're giving that money to the seller. They're going to pay off the seller's mortgage if they have one. If they don't, all that money goes to the homeowner. Now, once you find a house that you like, there's two things to remember. One, you can make any offer. Just make an offer. Doesn't really matter. However, you have to know this. If that home's been on the market 45 days or less, that seller is far less inclined to take money off the property. Now, you have to also look at this. To get a great buy on a lot of homes, it's important to ask the homeowner why they're selling. Oftentimes, you can get great buys on foreclosures and estate sales, but there's one more. That additional one is when you see a home that's been on the market for 100 to 130 days, 6 months, a year, you have to know that that homeowner is more likely to take less off the price of the house, because at that point in time, their home feels like a don't want her. It's like nobody wanted the property. And oftentimes buyers are like, well, I don't want that property. Why has it been on the market? And you horribilize it. You're like, something's wrong. No, you have to look at the price. So oftentimes homeowners price their property out of the market. They price them too high because it's money and you want to make the most money possible. But if you don't have a good appraisal on the property as a seller, and you don't have a good agent showing you exactly what you could sell the property for, and you want to reach out there on price, well, next thing you know, your home is going to be shop worn, nobody's buying it, and as a buyer, you certainly don't want to buy that. But you have to just look at that. You can see the price history, and if the price shows that it started pretty high and now it's come down, now it's more reasonable, don't be afraid to make an offer 5 to 7, even 10% less than what the seller has it listed for. Now, don't get me wrong, that doesn't mean that they're going to take that much less for the house, but it's a starting point, and you can make that offer, but you just have to know that they're probably going to counter your offer. If you don't offer full price for any property, more than likely they are going to counter your offer. They're going to say, no, I won't accept your offer, but I will accept this. And it's kind of a starting point. But just know that sometimes when you make an offer on a piece of property and it's substantially lower than list price, the seller will get frustrated and they will simply reject your offer. Now, just because they reject your offer doesn't mean that you can't make an offer on that property. You certainly can, but you have to know this. We never negotiate the price on anything unless we're buying big ticket items, boats, motorhomes, motorcycles, RVs, all that stuff, houses, right? But what oftentimes happens, and this gets in people's way, is they look at the $10,000 or the $5,000 or the $15,000, and what you have to do is know, I'm getting a loan, I'm going to live in this home, it's going to build equity over time, and what is my monthly payment going to be? That's so important, not just for real estate agents to know, but potential home buyers to know. If you're watching this, it's important to know, okay, if it's $5,000, that's $30 a month. Is it worth me paying an extra $30 a month for this house? Now, if you're happy with the house and happy with the payment, the next step in the process is to have the home inspected by a licensed home inspector. The licensed home inspector is going to come out and inspect the property. It's going to run around $400, and that's part of the $900 because you got to have the home appraised. The bank's going to require that, so they make sure that they're not over lending on this asset and you're not overspending, over buying, if you will, on this structure. The home inspector, they're going to come out and do a full inspection on the property, and once they do that inspection, they're going to give you a list, and it's about 150-page, 125-page report of everything that's broken, it's not working to its intended function. They're going to share everything with you on the property, and at that point, you can share that with the seller with a list of items that you want the seller to fix. And quite simply, the seller at that point can say, I'll fix everything, I'm not fixing anything, or I'm only fixing some of the things. The good news is, if they choose not to fix anything, or if you're not pleased with what they're willing to fix, you can cancel the contract, you get your deposit back, and it costs you no money out of pocket. Now I want you to notice I did mention deposit. So even though you purchase these houses and you only need $400 for the appraisal and $400 for a home inspection, typically you're going to have to put a $500 or $1,000 deposit on the property. But you just have to know this. You can tell your lender at closing that you wish to get that money back because it is a 100% loan. So you can get that money back. I can't tell you the hundreds of homes that I've sold for first-time home buyers where they literally got their deposit back and it only cost them the money for the appraisal and the home inspection. Now the next step in the process, and I hope you like these videos. If so, give us a thumbs up, subscribe to the channel. I promise you'll learn something on every episode. The next step in the process is to do a walkthrough. Typically 3 to 5 days before closing, you'll walk through the property just to make sure that the seller fixed those items. They'll typically leave receipts in the house to show proof that they have repaired any items that you've requested, or they'll bring them to closing. Now once you're at closing, it's going to take you about an hour to close on the property, and 75 documents that you will sign that basically say if you don't pay, you don't stay. But it's really important to know this also. It's exciting once you get possession of your property, and typically it's the same day that you close, and that's negotiated otherwise in the contract. But you also have to know that once you close on your home, if you close at the first of the month, like the 1st, the 2nd, the 5th, you don't have a payment for like 60 days. Like for example, if you close on a house on April the 1st, you don't have a payment until June 1st. Now how about that? In less than 15 minutes, you learn the whole process to buy a house through a USDA loan. You got to qualify, you got approved, credit score 620 or higher, been on your job, debt to income ratios, all that good stuff, right? Found a house, had it inspected. After the inspection, request repairs. After the repairs, they do the appraisal. After the appraisal, you do a walkthrough. You verify that the repairs have been made. You go to closing, you sign 75 documents. You don't have a payment for 60 days. It's not as hard as you think, and I promise you, I'm going to do everything within my power to educate everybody that's willing to watch my channel so you can own a home. Because personally, I think if you work every day and you want to own a home, you should be able to earn a home. I'm Wayne Turner. Thank you for watching. Until next time, God bless.